Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, October 14th. Continued follow through. Dow Jones up 111, Nasdaq up 31, S&P up 1064, Russell up 1481. Nice big follow through from Wednesday's low, Thursday and Friday, of course. So the markets continue to move higher. Now, can we call this a dead cat bounce, if you will? It's a little bit rough to say. I do think a lot of the basis was a short covering rally, no question about it. But the theme is now, where do we go from here? Where does this market go? Well, we did not get a resolution on the debt ceiling, or at least a 6-month extension like Democrats wanted. And the markets have opened and sold off, opened down 17 handles in the E-minis in the electronic session, now down about 11 and a half, up 12 handles now. So the drama continues coming out of Washington, and that is definitely going to trump the charts. However, there's really three factors here. We have the government shutdown. We have the appointed new Fed chair, Janet Yellen, who's an extreme dove. And then, of course, we have the hedge fund managers and money managers really lacking and underperforming the market. So what does that give you? To me, and speaking of the three, that gives me a market that I believe is in the longer term bullish. And I do think that once this resolution gets resolved, I do think that we go higher, getting closer to the end of the year. Aside from the fact that we are in a seasonal time of weakness, that usually ends the end of October, the beginning of November. So just keep that in mind. Would not get so bearish at this time. Remember, yes, news does trump the charts, but from what I'm seeing on the longer term time frame, the markets, I think, will continue to move higher. You have the government shutdown. Once that gets resolved, which I believe it will, the debt ceiling deadline is October 17th, this week. I don't see us defaulting. It would be out of control if the government were to allow that. Then you have Janet Yellen, who's an extreme dove, and I think that, if anything, she will keep policies untouched and continue to accommodate the market. And her, I believe her term of office will begin in late January. So at the very least, I don't see the Fed doing anything until January, or the next meeting after that would be March. Okay. Then you have, of course, our money managers who have been underperforming the market. And once they feel a little bit of nervousness that they are now getting closer and closer to the end of the year, I think that they will start really aggressively putting money to work. And if that's the case, then those big fund managers, the elephants in the room, will be pushing stocks higher. So that's my a little analogy, and as well, that accommodates what I'm looking at in the charts in the longer term. Now, the short term, obviously, we did get a couple of days of follow-through. I do think that was a dead cat bounce. There was probably some real buying in between. And like I mentioned last week, I still think we see one more move lower. And then from there, I do think that the markets will probably not in a straight line, but will start to move higher, getting closer to the end of the year. So it's difficult to navigate through this, but you have to really, really digest what's going on, and of course, manage your risk accordingly to your trading plan. Okay, so now let's get into the charts here. We are still on a sell signal in a bullish percent. S&P, as you can see here, this does take a while to turn up, but as you can see, we did get our sell-off here, and actually was a great signal. Now, where do we go from here? Well, we are touching the 30 line in the RSI, and we bounced accordingly, getting closer to that midline, which would act as resistance in the RSI. So keep an eye on this. This is something that we keep an eye on usually every couple of days, but we are on a sell signal with that. Now, the NASI weekly just triggered a sell. Now, we have to see where we go this week. So this week is going to be interesting. Do we turn back up and actually get back into a buy signal, or does the market, in fact, sell off and continue now to move lower? As you can see here, we've been literally since pretty much June, July, and August, up and down here on a weekly chart of the NASI. So this indeed turned into a sell signal. So we're just going to see if this will continue to move lower. But again, taking out of this low, starting this week, starting today, would probably get us at least a couple more days of selling. Now, here is the New York Stock Exchange Summation Index, and I'll just open that up for you. And that also went on a sell signal as well. So keep an eye on this, and let's see if this will get continued selling. Now, it is a little bit whippy, but this is a great indicator to follow as well, guys. So bullish percent went on a sell signal. The NASDAQ went on a sell signal. New York Stock Exchange Summation Index went on a sell signal. The McClellan Oscillator is in a neutral territory right now, so nothing really to go by here. This was a great buy-in on Wednesday when I said watch, because we are outside the Bollinger Band, and we also had some key indicators that indicated some sort of a dead cat bounce. Okay, so now we have the tick. I'm sorry, here is the U.S. dollar. I apologize. U.S. dollar. Now, this is interesting. This is where we're going to see where the U.S. dollar starts. If this starts to pick up steam here. Now, of course, we have overhead resistance. We have the 50. We have the 200. And, of course, we have this little cluster area here coming in at 81.10. So this is going to be a big area to break through. But if the dollar can start picking up a little steam and start breaking through this 81.78, you're going to see a lot of the major Forex pairs start to move as well. And it is needed. I mean, we have been in a range since March. A lot of the majors have been in longer-term ranges, and we really need to start breaking out of this thing to get some movement here to the upside and or downside for that matter. But watch the dollar. I do think the dollar will get some renowned strength here. And I wouldn't call the dollar out right now saying that the dollar is done, but I would still think the dollar starts to rally. Now remember, the relationship is inversely correlated, but that also changes, so please be aware of that as well. Okay, so let's take a look at the VIX. Let's take a look at stocks above the 50-day moving average. Now we're back to the 74 percentile, as you can see, and here is our downtrend line, which is right at it. So again, we have resistance here. We're on sell signals. So just a word of caution, and of course we're down 12 right now in the minis. So we could retrace that move from Thursday and Friday, and even possibly make new lows before we get to the debt ceiling. And if the debt ceiling and there's no resolution and we default, I would say all bets are off to the upside until this market really flushes, and it could flush. So be very, very careful here, guys. We have the crazies out in Washington really obviously care less of what's going on here. Here is the new highs, New York Stock Exchange new highs. Nice. This actually bounced off of the zero line. This is what I was showing you last week. We had a nice big continued up. Remember, bull market, we're above the zero line. We could dip, but as long as we get back of it rather quickly, that's fine. And sure enough, that's exactly what we have. So this is why I'm saying be very careful here. This is a good sign that the market has now bounced back. This is the New York Stock Exchange new highs. But again, let's just keep an eye on these indicators, because if they all start now pointing lower, that's something that's going to be a big concern of mine. Here is the VIX. Now, the VIX actually, great call on this one here. We said watch out outside the band. We did get a couple of whipsaws, but we didn't get a trigger, right? So this one came outside the band, closed lower, and then Friday even lower. Now, we're coming into this area of support here, right around 14. We should bounce again, obviously, because we are down 12 and a quarter handles in the E-mini electronic session. If that holds through the opening, then we should get a decent-sized bounce. And we'll see where this goes. Right now, this is giving me nothing other than the fact that we should have some follow-through, or we would come back up and at least double top this area here. But we'll see. Not much here. And, of course, the CBOE put-call ratio closed in neutral territory again, so obviously to be expected. Now, let's take a look at the XLF here. This is interesting. This here is trying to cross back up into a buy signal. We had some renowned interest here in the bank sector. JP Morgan came out, better than expected earnings on Friday. Wells Fargo, not so great. They had a little bit of a miss, but that was actually getting bid up. Goldman Sachs had a great three-day rally. I mentioned that also last week. Keep an eye on that for a retracement rally. That also did good, but did not take the 160, and I'll show that to you in the chart segment. But also here now, if we could start turning up, this is a good spot here to move much higher. And if that's the case, and the banks start to follow, then I think you're in. The markets will at least assist the Nasdaq, because the Nasdaq has been actually holding up extremely well. All right, let's take a look at the bullish percent USO. Trying to curl up here, but really, guys, there's no trade here. I wouldn't even touch this at the moment. I do think it does look like we're going to probably test this 35 area right up in here. Here was the symmetrical triangle that we were talking about here back in July before we broke out. But this here, guys, I think that we're going to probably break down and at least test this area here. Now, this is a good spot to at least try. Now, we tried this here. I said watch for a bounce, and we did get a beautiful bounce here. But that bounce was negated all the way down for the last 5-6 days, and now we're barely holding here. I don't like this area here. I'd rather let it go and trade without me and get a better area of support here. Take a look at the at gold. Same thing with gold. Gold, unfortunately, has to be really, really quick. I love gold up here. I loved it up here, but look what happened. Touched it and just sold right off. Never gave me a bounce to get in. So gold back up to this area, maybe the 1345 area underneath the 50. I would try to take that for a short. If not, gold's going to be, again, the better buy at 1,000 to 1,100. Remember, guys, gold is in a bear market now. We pointed that out many times, so be very careful with that. And here's something else I wanted to show you. Here is the ratio chart of consumer staples and consumer discretionary, right? What happens is we want to see money flowing into the highly speculative sectors, especially the consumer discretionary. And we want money coming out of consumer staples. Unfortunately, that has been happening, and now we are getting a break back out again. So we don't want to see consumer staples lead this ratio chart. Now, the S&P, if this were to happen and this starts to break higher, logical spot money will be coming out of S&P and going into these utilities, maybe some of these high-yielding performance safe asset sectors. Okay, so this is something that I don't want to see. But this is just something right now. It did break out, but could always get back down again. This is something I'll be paying back attention to. But you could see here, money came out of consumer staples and was going into S&P, technology, consumer discretionary. Now we have this inversely correlating now. So let's just see what happens here. Just pay attention to it. Something that fun to watch too as well. All right, so let's get into the chart segment. Just want to show you the GLD here. If we lose this lower part, I think this GLD is going to be in really big trouble. But I do think that gold is still a short. I like gold short. Unfortunately, never let me get in. Never got in the trade. But if we can get back even, maybe even back about 127-ish area, right up in here, get a back test, even 130-ish, I would be looking to short gold, at least for a trade, back above this pivotal high. I'd like to see it back up in here again, but I don't know what's going to take to do that. USO, again, just to show you, this is really the spot. This is what we were looking at back in the early spring into July. We had that symmetrical triangle. Just wanted to show this to you guys right here. We did break out of it. Now, I think the logical spot's going to be this upper end here, this little area, because we have a thin zone here. If we lose this thin zone, easily could flush back down to 34.5, but logically, I think you're going to get a big test of the 35.16. Okay, so keep an eye on this this area here. I'm going to let this one go. We had a nice call on this one, but this one here, to me, no trade on USO at the moment. All right, so the weekly charts, S&P cash weekly, higher highs and higher lows. The bullish symmetry remains the same. Nothing wrong with it. We tested the lower uptrend channel, and we continue to move higher. As you can see here, RSI not quite overbought, rolling down from its overbought state in the stochastics, and again, same thing with the MACD. So I think we're looking okay here. I wouldn't get too crazy and too overly bearish at the moment. Now, in the short term, yeah, you could try some puts, buy some puts, sell call credit spreads, or just outright short some of the market. But I would be real cautious. That's not my thing to do. Here's the S&P daily chart. As you can see here, coming out of this downtrend channel, breaking bearish symmetry. Now we're back above the 20-day moving average. And the logical spot to be a pause would be somewhere around the 1720 area. Again, we did have 2 big days, so it is okay for a pause, but obviously markets, you don't want the markets to be selling off really hard, giving back all of this move that we built on. Here is the monthly on the spiders now. And as you can see here, yes, this is an uptrend channel within a bearish rising wedge, but it's only bearish when we break it on a monthly chart, right? And right now has a lot of work to do. I do think that the markets are going to pretty much hold in here. And even if we did break, you're going to have heavy support, which was resistance at 159.15. Even call it 159. So this has a lot of work to do on the downside. And if you look at the weekly chart, and this is really a little bit more what I like to see. Nice big movement. We had a lot of volume come in, more volume from the previous week, which is nice. And here again is this bearish rising wedge within an uptrend channel. We held it, we breached it, we held it. But if we do break this on a weekly chart, I think you're going to start getting a little bit, people are going to get a little nervous, a lot of market participants, and then they're going to start looking to probably sell the market. So a word of caution, definitely to be noted, but I wouldn't get too worried about that at the moment. Here is our fib clusters, 166.60, and then of course 162.80. Got back above it, and we're above the 20-day moving average. Very constructive for the bulls. Now let's see where we go from here. I think the logical spot, if it were to, now everything's not going to go in a straight line, but 170, 75, 174, 50. Maybe a double top from this area here. But again, has a lot more work to do. We have to regain some of this loss that we have in the overnight session. But again, guys, remember, anything can happen. News will trump the charts, and those crazies in Washington obviously seems to me that they could care less about what's going on with this market. IWM, excellent, excellent move higher. This is what we want to see. For the bulls, you want to make sure that the IWM, which is one of our leaders, we are now getting close to taking out our existing highs and making now new all-time highs. So very good, very constructive. So we do not want the IWMs to really start breaking down. It's something that we don't want to see. But right now, really, really acting well. Diamonds, above the 50, still below the 20. Tested the 200-day, had a big, big, big oversold rally. But again, this needs to now really prove itself. If it can sustain a lot of this move, at least 50% of this move, I'd still be okay with looking at further upside in the diamonds. Now, again, we're oversold here, deeply oversold, as you can see. We still haven't even quite gotten above the 20 percentile in the stochastics. And MACD still hasn't even crossed over yet. So, again, a lot more work to do, maybe a little backing and filling, breaking down. I wouldn't want to see it take out Friday's low, though. I'd like to keep it in between that candlestick. Transport's even acting pretty well. So again, nice big move for 3 days. I do think the uptrend is still intact. Short term, obviously, we're getting held hostage here for the debt ceiling issue. So once that gets resolved, and then again, having Janet Yellen appointed in January, I don't think there's going to be a change in policy. And then we have, of course, the money managers underperforming the market. That's going to add fuel to further upside, I believe, at least at this time. Goldman Sachs, great, great move up. And I did say here, once we get back above here, you could take this as a retracement rally. We still did not get above 160. Okay, now, here's the thing. We need to get above 160 here. And I'd like to see another push up, and then that one pullback, high or low, will be something that I'd be looking for a longer-term trade, maybe somewhere right around the 20-day moving average. But again, a nice retracement rally. Let's see where we go. If we can build on this, make a lower high, maybe back test this area, 156.35, and then break back up again. That also would be fine as well. But again, I like to see the banks. They look like they woke up a little bit. That's pretty good. XLF, again, above the 50, above the 20, acting really well. I'd like to see a little more volume, but again, nonetheless, I'll take it. Nice little move higher here. So now we'll get the banks waking up, technology doing well, transportation sector holding up well. That's great recipe for further upside. But again, remember, news will trump the charts. Apple doing okay. I got to tell you, Apple did not. Really didn't blink from what was going on from the last several days last week. So if Apple can take out this area here, 495, well, actually it's still 495, 497 this area. If we can break back above this on a closing basis, you're going to get at least a 505, and then obviously 519 area test, and then we would see where we go from there. We are coming into the holidays soon, so this is a good spot for Apple. If it can hold in here, I think Apple might take a big run up higher. So we'll just see. Let's take it one step at a time. Me personally, I'm going to look for a 497 close, and then I would look more interested to the long side in Apple. Lastly is the Qs. As you can see here, Qs getting close to its highs, and it would be nice if the Qs can take out the highs, the Russell, and then of course transports start to move. You're going to have your leaders moving higher, and if the banks can kick in, then I do think that we will see some further upside movement. But obviously, until this debt ceiling is resolved, that is going to be the median factor here. This needs to be resolved. If not, you're just going to get a tug of war with the markets up, down, and that's something where if you're not so keen on, take a step back, cash as a position, wait till this gets resolved. Thursday is going to be the day, but I'm sure they'll come out with something prior to that. Have a great day. We'll see you tomorrow, and be safe out there, guys. Take care.